I recommend investors to sell Amazon, Nasdaq, AMZN. My bearish sentiment is based on my belief that Amazon is focused on rearranging its workforce and managing macroeconomic headwinds. Hence, I don't expect the company to outperform in the near term. I believe Amazon's 3Q22 earnings report highlighted trouble with net income dropping 57% YoY. Since the company reported its earnings for the third quarter of 2022, the stock slumped about 25%, and I expect more downside ahead. Nevertheless, I am bullish on Amazon in the long run, specifically with its AWS retaining the leadership position in the cloud infrastructure market. However, I believe the company will have a rough few months as it rearranges its workforce and maneuvers the macroeconomic environment. Rearranging workforces and maneuvering macroeconomic headwinds. Amazon stock was cut in half in 2022, and I believe the stock will still face a few rough months of cost cuts and macroeconomic challenges before it recovers. Similar to e-commerce companies, Amazon's stock increased exponentially during the pandemic and experienced the withdrawal of growth catalysts last year as the pandemic environment lifted and inflationary pressures rose. My bearish sentiment is based on my belief that Amazon will be dealing with two issues in 1H23. 1. Cost cuts and reorganizing workforces. During the pandemic, I believe Amazon overexpanded as management anticipated growth that has yet to materialize. In November, the company announced its first major job cut of around 10,000 jobs since going public. At the start of 2023, I saw this number rise to potentially over 18,000 job cuts, communicated by a public staff note from Amazon CEO Andy Jassy. I believe Amazon will be pressured in the near term as it reorganizes its workforce and looks into cost cuts. I expect the pending need for cost cuts as the result of the company's overexpansion during the pandemic. Bloomberg reported that Amazon's global workforce surged around 75% during the pandemic to keep up with the demand created by the work-from-home environment. I believe Amazon is now dealing with cost cuts as it faces weaker than expected demand. 2. Macroeconomic headwinds. Macroeconomic headwinds is a phrase that was thrown around a lot during 2022 and for a good reason. While Amazon remains a tech stock pro's favorite from the FANG stocks, it is not immune to inflationary pressures and rising interest rates. I expect Amazon to continue to feel pressure from eroding customer spending power in the first half of 2023. While multiple analyses of Amazon on Seeking Alpha preach that the stock is a buy after the major pullback in 2022, I still don't believe Amazon is out of the woods as inflationary pressures and spiked interest rates persist. In 3Q22, Amazon reported net sales growth of 15%. However, I believe the company's bottom line is significantly weaker than in earlier periods. I believe inflationary pressures don't only harm Amazon's customer spending behavior but also spill into the company's operating costs. Inflationary pressure raised Amazon's operating costs on all fronts. I believe inflationary pressures are reflected in Amazon's operating income and cash flow declines. Amazon's operating margin dropped to 2% in 3Q22 compared to 4.4% in 3Q21. I believe the first half of 2023 will be crucial for Amazon to restructure costs and workforce to maneuver the macroeconomic environment. I am bullish on Amazon in the longer term. Amazon remains the largest online retailer in the U.S. e-commerce market, with a 37.8% market share as of June 2022. Amazon's AWS is also still the market leader in the cloud infrastructure market as of 3Q22, exceeding the combined market share of competitors Microsoft's, MSFT, Azure and Alphabet's, Google Cloud. My bearish sentiment is not because we believe Amazon has bad fundamentals. Instead, I expect the company is working through the grunt of adjusting cost structures to revive profitability. Valuation. I believe Amazon is overvalued for the near-term pressing risks, trading at 26.7 times EPS, $3.07 on a P/E basis compared to the peer group average of 16.6x. The stock is trading at 1.4x EV sales versus the peer group average of 3.9x. I believe the stock still needs to factor in the near-term risks facing Amazon and recommend investors exit the stock at current levels. Please subscribe and like this video for more stock analysis.